All right, for respect of everyone's time, we're going to get going. Again, thank you all so much for being here for Credit Matters, building a strong financial foundation. So as we're going through this here this evening, if there's any questions that you have, feel free to drop those into the chat. I will do my best to monitor those, but we also have Kanika here helping us out as well and letting me know when we see things. So when you think of something, put it in the chat and we will get to it as soon as humanly possible. Also in the chat, there is a PDF, two-sided, that has some great information and some great resources on it. So one side is the side that I did. It is the very informational, very boring side. And then there's the marketing side, which is very pretty as well. So you have those options there for you. Also, this session will be recorded. So if you have to drop out or not able to finish, or you want to share this with others, we are recording this. So, and we're looking to put it on our social media pages, I am told. So look out for that after this session here as well. And you're definitely going to want to stay tuned for the entire session, especially at the end, because we are going to be giving away a Amazon $50 gift card as well. Yay! As we're going through this. So, again, thank you so much for being here, talking about a very, very important financial topic. Credit, it can give you a lot of advantages. It can open doors for you. And it's not just loans either, but it can also do a lot of harm in a short period of time. So again, so glad that each and every one of you are here to learn more about this topic. I am Tony Byer. I am our financial wellness coordinator. That is me on a much better hair day and much better dressed. I'm also a certified credit union financial counselor and do some financial coaching here at the credit union in addition to financial education. So what we're going to be talking about in our brief time together, it is going to be understanding credit. What is it? What does it do? And also credit scores as well. What goes into those and what gets reported to credit reporting agencies, and what do they report, or what do they give when requested? What's in your credit report? We'll talk about how to get your credit report, how to improve your credit standing as well, if it's not quite where we want it to be, or if it's good, we want to keep it good as well. Also, we're going to tackle some myths about credit. Here at the credit union, we hear quite a few of those, so want to address some of those things that get said quite a bit that aren't quite true, so understanding why they are what they are, and how to get your own credit report as well, which I encourage everyone to do and check those out. So when it comes to credit, the whole process goes through what we call underwriting. We have our underwriters. They are making the decisions. They say, yes, we approve. No, not quite now. Or maybe those hard maybes as well with those. So what they're looking for, there's 4 C's when it comes to credit. Depending on textbooks or where you look, there's anywhere between 3 and 5. So we just cut it right there in the middle of 4. And they're all saying basically the same thing. And the biggest is your credit history. So how someone has been with credit in the past, it's a good indicator of how they're going to be in the future. So if someone's been good with credit in the past, good indication, they're more likely going to be good in the future. If they've been bad, doesn't mean they're going to be bad in the future. It just makes underwriters just a little bit more nervous. Also, the next C, it is capacity. That is how much credit is available to someone, and that's in the form of credit cards, installment loans, could be lines of credit, things like that. And then how much is someone using? Just because we have a whole bunch of credit available to us and credit cards and things like that does not mean we have to use it all. In fact, the distance between what's available to us and what we're using, the distance should be good, great. It should be grand is what it should be. We shouldn't go YOLO and max out all our cards. And don't say YOLO. Nobody has said YOLO in years, so please don't do that. The next thing is going to be character. So this is looking many ways your possible relationship with a financial institution. So if you have a checking account, savings accounts, they may look at, has that checking account been overdrawn in the past? What are, let's say, deposits like? And then also it's going to look at conditions, and it's going to look at employment and ways and making sure that this person is going to be able, this borrower is going to be able to repay their loan as well. So it's another one of those, like the credit history, past performance may indicate future behavior and things like that. with this. And then also the fourth thing, it is collateral. So what could be put up of value if things go south, they go sour, they don't quite go as planned? What is something of value that could be put up that could possibly cover the load or something like that? So these are the 4 C's of credit, and these are what our underwriters are looking at when they're making those decisions for yes, or they might say no, not right now, or again, those hard maybes. Credit reporting agencies, also known as consumer credit bureaus, they are companies that collect information from various sources and provide consumer credit information on individual consumers for a variety of uses. That's a lot coming out of my mouth right there. I like to simplify it. And the big 3 that we're talking about, Equifax, Experian, TransUnion, for the most part, they are keepers of credit information is how we can think of them. Credit information gets reported to them. And then when someone is authorized to receive a report, or if you request your own report from one of the 3 or all 3, they provide that information to those that are authorized as well. There are more than just these 3 credit reporting agencies, but these are the big 3 that we think about when it comes to our credit, especially us as consumers here. And we'll talk more about credit reports right now. When it comes to credit, at the very, very top of your form, it's going to be all the identifying information. So it's going to be your name. It's going to be, well, your full name, former name, maiden names, even nicknames can be on a credit report. Current address, current employer, former employers, date of birth, former date of birth. No, I'm just kidding. You only have one date of birth. And social security number as well. And all that information is there. And that is a part of our customer identification program. Every financial institution has to have it, and basically making sure this person receiving that report, or it is actually that person, and it is not fraudulent or someone else pretending to be somebody else as well. So it's a very rigorous process that we go through, and that's why that information is on there. The biggest part of a credit report, it's going to be the trades, we call them. These are all just credit accounts, basically. In the biz, we call them trades, though. And it's going to be the different types of credits. Is it credit card? Is it a mortgage? Is it a line of credit? Could be, something flexible, whatever. And then when was it open? What's its current balance? Its high balance. When was it open? What's its current status? Payment history, and if it was closed and why. So that's the biggest part of a credit report. It's going to be all that information on those different types of credit. Next, it's going to be public records. So a lot of these are going to involve official, for lack of a better word, stuff. Possibly could be court, but official documents, stuff like that. So liens, a lien is somebody has ownership of an asset. Bankruptcy, that's basically going into, bankruptcy court and pulling out your pockets and saying, everybody that you owe money to, there's no possible way I could pay you. Evictions, closures, foreclosures, judgments, all of those things. Like I said, they're going to involve some official proceedings or paperwork or things like that. That's on a credit report. And then also inquiries. Who has accessed your report in the last 2 years? So when it comes to inquiries, there are 2 types, hard and soft. Hard inquiries means a borrower or someone has authorized an institution. It could be possibly an employer. It could be a business, auto dealership, financial institution. They say, yes, you can check my credit. It's going to be on a credit report for 2 years, and then it just falls off. Okay, that's that inquiry falling off. I don't know where it goes, but it's not on your credit report any longer. And then there's soft inquiries, and that's when you pull your own credit report. It does not count against you. And also if you receive any pre-approved offers, let's say through the mail, you get approved for a super Platonium card. I don't know. That sounds amazing. But you didn't do anything to get that. So that doesn't count against you. More than likely, your information was probably sold somewhere and you're getting those offers. And always a good idea to opt out of some of that mail and things like that. And also pre-approvals could be if you are, let's say, looking at a couple different credit cards, or it could be possibly mortgage. So there's instances where your credit's not pulled, but you get a pre-approved offer based on information you're providing as well. So they're not pulling the credit, it's something unofficial. So those are soft inquiries. They don't count against you, especially getting your own credit report which I really, really suggest people do. And also, when it comes to the credit report, I wanted to see how us as an audience. I'm going to put up a poll here in just a moment, and asking, when it comes to a credit report, how often do we do that? So a poll should be coming up. So we have a few different options. Is it do you look at it weekly? Since COVID-19, you can actually get your credit report for free from each of the big three, Equifax, Experian, TransUnion, and you could do that once a week. It used to be once a year. Now it's once a week. So in the past, I always recommended people pull their reports when the McRib comes out or something like that. But now you could do it every week. Do you do it monthly? Is it a few times a year? Is it once a year? Once in a great while, if it's been quite some time, or if we've never checked our credit report. So love to poll the audience and see these results here. So excellent. We got a few responses. So excellent. We've got monthly, a few times a year, and then haven't checked the credit report. That's okay. We'll tell you how to do that. And again, it doesn't count against you whatsoever. It's a really responsible thing to do here as well. So all of that information from a credit report, it goes into a credit score. So credit reports and scores, those are two different things. There are many types of credit scores. The most common credit score, it is the FICO score, the Fair Isaac Corporation score. It ranges anywhere from 300 to 850. There is another widely used credit score. It's called the Vantage score, and it mirrors, it mimics the FICO score, also the same range, 300 to 850. They're pretty similar. And what a credit score does, it assesses risk. It's basically the higher the score a person has, a borrower has, the less likely they are to default on a loan, meaning they're not going quite some time without making any payments or anything like that. If somebody has a lower score, that means they're a higher risk to a lender. So that's what it does. It assesses risk, is what that credit score does. And FICO, they don't give us all the main, they give us the main ingredients to their secret sauce, but they don't give us the actual recipe, the algorithm for it. But there are 5 main areas that go into a FICO score. And the biggest piece of the pie, 35%, it's payment history. Just like that first C that we were looking at when it comes to the underwriters, that's going to be the biggest thing. 35%, how someone's been with credit in the past, indicator of how they are going to be in the future. 30% is the capacity. So that's, again, how much credit's available to someone and how much are they using. We want to keep, again, that distance between what we're using, that utilization, we want to keep that low if possible. So that's 30% of your credit score. So already 65% already using that. 15% is the length of your credit history. So those with a very good credit score, typically going to be those that have been good with credit for quite some time. So someone with a shorter credit history, little things, it's going to be more volatile until there's more information to go off of over time. So 15% is the length of a credit history. And also the newer something is, whether that be a missed payment, whether that be, capacity really high for a month or something like that. The newer something is, the more impact it has. The older something is on a credit score, the less impact it has. 10% has been what's going on lately. If balance has been going up, have they been going down? We've been having more inquiries and applying for credit at other places, or have we slowed down on that as well? So that's 10%. And the remaining 10% is the mix of that debt. Not all debt's created equal. In fact, when it comes to a credit score, revolving debt, also known as credit card debt, that's looked upon less favorably than installment debt. And that's going to be like an auto loan. That's going to be a mortgage, could be student loan, something like that. So there's something typically of value attached to an installment loan, and that's why it's looked upon more favorably than something like credit, where there's no asset, there's nothing to back it up. It's unsecured debt. So things that hurt your score, Biggest one, it's going to be missed payments. A missed payment can be on your credit report for up to 7 years. So that's reported to the credit bureaus as something is 30 or more days late, typically. So not only missing payments is going to hurt your score, but there's also going to be fees when it comes to late payments and things like that. So it hurts your score. It hurts your pocketbooks in many ways. So do everything you can to not miss a payment with any credit. Make at least a minimum payment, but if you can make more than that, always do that. And if you can pay it in full, that's the best thing. If we're keeping credit cards at capacity, if we are up to our limit on our credit cards, that is going to hurt our score because, again, 30% is that capacity that we talked about. The next, it's going to be closing credit cards. Now, that might sound responsibly, like, hey, Tony, that sounds responsible, closing credit cards. You can't get in trouble there. But I'll show you how that can actually hurt us in a couple ways. So let's say we have two different credit cards. We have our Altra Visa Signature card, of course, and then we have this blue card right here. So the Signature card has a $3,000 limit. Blue card has a $2,000 limit. Together, $5,000. It's what's available to us. That's the limit that we can go up to when it comes to between these two cards. Now, let's say on our Signature card, we have a balance of $1,000. That's what we owe on that card. And the blue card, we don't get anything from it. We don't use it. It's just in our wallet. That does not have a balance on it currently. So if we look at how much is available to us and how much are we using, it's 20% utilization. We want to stay, when it comes to especially credit cards, you want to stay less than 30% utilization. Less than 10% is even better. 0% is great. Then you're a convenience user. We're paying off our card in full each and every month, and we pay nothing in interest, which is great. So we're doing okay with this. We have 5,000 available to us. We're only using 1,000. But let's say that blue card, it's just taking up space in our wallet. We don't use it. Maybe there's an annual fee associated with it, and we don't want to pay that anymore. So we close it. We call up the blue card place. So we say, nope, we don't want that card. So now that $1,000 that we owe, that didn't go anywhere. We still owe that. But now instead of having $5,000 available to us, now we only have $3,000 is still there. And that puts us more than 30% utilization, 33%. We are in the Kenny Loggins danger zone right there. And also, if that blue card was a card that was a credit account that we had open for quite some time, it's also going to affect the age of our accounts, the average age of all of that. So that's a couple ways in which closing a credit card can hurt your score. But if having a card without a balance on it is going to tempt you to spend more than what you would already, you're better off closing the card and taking that temporary hit on your credit score. If you're opening up a lot of different accounts in a short period of time, let's say you go to the mall or what's left of it, depending on where you're at, and every store is probably going to ask you, would you like to save 20% today by opening up a store card? And you say, yes, I would. That sounds great. That is going to affect your score because there's going to be a lot more inquiries. And also underwriters are going to look at, like, why is this person applying for credit in a lot of credit in a short period of time? Makes them a little bit more nervous. If we have more revolving debt, we can, again, recognize that is credit card debt. And installment loans, that's going to be, again, those auto, mortgage, things that have something of value related to it. And it's called revolving debt because about half of credit card users, they're considered revolvers. So every month they might make a minimum payment, or they're not paying their balance off in full. And whatever is remaining after that payment, interest gets applied onto it. That balance revolves. And every time that balance revolves to the next month, it picks up interest as well. So that's how credit can be, and credit cards can be more expensive and can be like a treadmill that we just don't feel like we're going anywhere as well. So if you can make your payments in full on time, certainly do that. Be a convenience user, or I believe transactor is another word for that. If we're shopping for credit excessively, if we're applying for a bunch, maybe we're not getting approved for some of these things. Again, there's going to be more inquiries, those hard inquiries on our report, and a lot of those are going to do some damage. A single inquiry typically isn't going to do a whole lot. It's when you have a lot on there. According to FICO, one hard inquiry, it'll take less than 5 points off a score. But if someone with a short credit history or if they don't have many accounts, it can have a little bit more impact as well to know that. But the biggest thing that hurts your score, it's going to be missing payments. Again, up to 7 years, that can be on a credit report. Bankruptcy, that can be on a report for 10 years as well. So anything to avoid that, we certainly want to do that. A common question that I get, it's establishing credit. How does somebody get started with credit? Because you said a big part of it's credit history. And if somebody doesn't have credit, how do they get credit? So there's a few different ways in which you could do that. So it can be a credit card. It can be getting approved for, let's say, an unsecured card with a very low balance, perhaps, or it can be a secured credit card. So in many ways, it's kind of like a credit card on training wheels. That secured credit card, if we want a credit card with a $200 balance, we're going to have to deposit $200, and that's going to be our limit. And then if we're good with that card, if we're making payments on time, if we're doing all that, if we show that we can handle that secured credit card, we can get our deposit back, and it graduates basically to an unsecured credit card. So it can be a way to get started again with that secured credit card.
Hey, Tony,
authorized user.
We did have one quick question before we get too far in. Someone was asking, do inquiries drop off your report at some time?
Yes, after 2 years. After 2 years, they don't appear on your report anymore. They're like they never happened. But yep, over a period of 2 years. And also going back to those inquiries, excellent question. Let's say we are, rate shopping for a new auto, let's say an automobile or something, and our credit might get run, through a few different financial institutions. If it's done, and it depends on the scoring model, but FICO scoring model, anywhere from 45 to 14 days. It's looked at as one inquiry because it basically, and if it's for the same thing as well. So it sees, okay, we're applying for an automobile. We might have, our information may have gone to a few different banks or credit unions, finance companies. They see that, and it's all for the same thing, and it's within a short period of time. It only counts as one inquiry according to the FICO score, and depending on the FICO model as well. So also know that. But the biggest thing that affects the credit score, it's going to be missed payments is the biggest one. But excellent question. We can open up a line of credit. So that could be something that could back up a checking account. Perhaps if we were to overdraw, let's say our checking account, that could be something that could be used, or it could be a revolving, just open line of credit that we could use. Perhaps that can help us get established with credit. Retailer gas cards, the approval process may be easier for those, but also know that they're pretty limited, obviously, where you could use them. Typically, retail cards, you can only use them at one place or a few. Gas card, more than likely just one gas station or a few. And also the interest rates typically are going to be higher. So if you have those cards, make sure you're making those payments in full on time as well. That way you pay nothing in interest. And student loans. And I'm not telling you to take out student loans just to get started with credit. No. Anything you could do to reduce your student loan burden, certainly do that. Look for, grants, scholarships, talking to students if they're currently in high school or in school, taking those AP classes, post-secondary options, getting that college credit while they're in school here. But student loans, it is credit. So it's another way that credit gets established as well, those that don't have it. Things that don't affect your credit score, believe it or not, a credit score, it has no idea how much money you make. It doesn't know anything about, it knows about your credit, it knows about your payments, payment history, all of that, but it doesn't know anything about how much money you're making as well. It also doesn't know about your employment. It doesn't know if your employment's full-time, part-time, if it's salary, if it's hourly, if we get, overtime, commission, is it seasonal? How long have we done it? How stable is it? It doesn't know any of that information, and also doesn't know anything about where we live. Do we rent? Do we own our own home? How long have we been there? But lenders absolutely want to know this, and this will all be asked on a loan application as well. So that's something that information that will be provided. But these are things that aren't on a credit score because it has no idea about them. So talking about credit cards, want to talk about some advantages of having them. Like I say, credit, it's a tool. I don't think it's inherently good or bad. It's all in how you use it. If we use it responsibly, it could do a lot of good for us. And we'll talk about those advantages, but we'll get to the disadvantages on the next slide. If we, use it to live beyond our means, if we're making late payments, if we don't have control of our own money, using a credit card, it's like, putting gasoline on a fire. So we want to be able to manage our own money before thinking about credit, which is somebody else's money. But a credit card, it could be a very convenient payment tool. We could buy things online. We could use, mobile pay on our phone or something like that. But it can be very, very convenient and don't have to carry around a whole lot of cash. It can be very useful for emergencies as well. Sometimes you just never know what might happen. So having a credit card, being able to do that, it can get you out of a tough spot. Car breaks down on the side of the road, let's say, or something like that. Those emergencies can be very, very useful for that. Credit cards typically required to hold a reservation as well. This would be a hotel, rental car, or something like that. And it's better to use a credit card for those things instead of a debit card because they're going to put more likely they're going to put a hold on your money if we're using a debit card. So that's money you don't have your own money you don't have access to until that hold is removed. When it comes to a credit card, again, that's somebody else's money that hold is on. You're able to purchase larger items and spread out payments as well when it comes to a credit card. There's fraud protection as well. $50 is the absolute max when it comes to liability, when it comes to fraud liability, if there is fraud on your account. But all the major card companies, Visa, MasterCard, Discover, they all take care of that. So there's zero liability to you as the user, as a credit card holder, when it comes to fraud as well. You have the opportunity to establish a positive credit history if we're using a credit card responsibly. We're making payments in full, especially on time. Absolutely. Online shopping. It's typically safer than using a debit card. If anything was to happen, it's a lot easier to do a chargeback because, again, it's somebody else's money, that credit card. Debit card, that's going to be your own money, and that could be not as easy to get back as well. A lot of credit cards have a lot of extra security features with them as well. They may extend warranties on different products as well to entice you to use those as well. So online shopping, typically, if we have the choice, using a credit card is going to be more beneficial than using a debit card. And there's those nice perks with credit cards as well. Bonuses, frequent flyer miles, cash rebates, discounts, all of those things. So if we use it well, there's a lot of advantages. But there are disadvantages as well. If we are, let's say, just making minimum payments on our credit card, every month interest is being added to what we didn't pay. And that could be pretty costly when a balance is revolved. According to creditcards.com, the last report that I saw from them, now this is from October, I haven't seen anything updated from there, but the average credit card interest rate right now is a little more than 21%. So if we're taking out a loan with 21% interest, that's a terrible loan, but that's where the average credit card is right now. So again, make your payments in full on time. You pay nothing in interest. Additional penalty fees may apply if we're making late payments, if we're at our max, or if we go beyond our max with the interest, things like that. So there can be some additional fees. And when we pay fees, we have nothing to show for it. It can be very tempting to overspend on a credit card. It may not quite feel real, or we kid ourselves and say, okay, I'm going to buy these shoes, or I'm going to buy this now. and I'll have more money in the future. I'll be able to pay it off. No worries. It'll be fine. Things will work out. So it can be very tempting to overspend. There is a risk of identity theft. Virtually all of us are at risk of identity theft. It happens quite often. And the question now, I don't think it's if in my lifetime am I going to be a victim of identity theft. It's more of a question of when. That is a very different presentation that I have that we'll be doing in the future. But anything you do to secure your identity, certainly do that. You are responsible if you lose your card, if your card is stolen. What you should do right away if you notice your card is missing, don't know where it is, can't find it, could be stolen, lose your wallet, billfold, purse, right away call your financial institution and close that card, cancel that card right away. The sooner you do it, the easier it's going to be for you, for the credit card company, financial institution, all of that. So right away, report it. And all those, if we're applying for a lot of different credit cards, that can have effect on our credit score as well. So some of the good and bad when it comes to credit card. Some different myths about credit. Common one that I know that I've heard, I've seen commercials, things like that. Check your credit hurts your score. That is false. It does not. It is actually very responsible, and I encourage everybody to do it. If you haven't done it or if you haven't done it in a while, certainly do that. Annualcreditreport.com is the place to go for that. I have that on the resource sheet, and I have it in a future slide as well. But it's a soft inquiry. It doesn't hurt your score. It is very responsible, and you should do it. More income equals a better credit score. That is not true either. Again, like we said before, a credit score has no idea what you make for income. It knows your employer, it knows where you work, but it doesn't know anything about your income. There are, I've heard instances and heard examples of high earners, and they are living paycheck to paycheck or living on credit cards as well. Those with high income, they may not have a great credit score, especially if they're really, over relying on credit. But I've seen and heard of instances where people have a very modest income and their credit score is great. So your income does not matter when it comes to a credit score.
Hey, Tony, we have a couple of questions. One of them was, how often would you recommend checking your credit?
You can do it as often as once a week. The more the better, because, studies have shown, I know I saw something from the the CFPB, the Consumer Financial Protection Bureau. They estimate that about 20% of credit reports have some sort of error or mistake on them as well. So good idea to check those. Again, you could do it as often as a week. I would say once a month is great. But if you want to do it once a week, awesome. And, set reminders. But like I said, you can do it a lot more now in the last couple of years than you could previously as well. And saw a note on here asking about that resource sheet. We could certainly email that. We're actually going to be sending out an email with a survey. The email address that you registered with, and we could certainly send out an information sheet or something like that with it. So absolutely. But again, if you scroll up in the chat, you should be able to see it and download it here if you like. Another myth that we hear. I'm sorry.
Sorry. One more question, Tony. Is Credit Karma a helpful resource?
Yeah. So talking about some of those credit monitoring programs, Credit Karma is probably the biggest one that I've heard of. Equifax has one. Experian has one as well. Credit Karma utilizes TransUnion and Equifax data, I believe. I know TransUnion for sure. It is. So it's something that it doesn't cost you anything. On there, you can get your Vantage score, which again is a score that mimics a FICO score. The Vantage score is that's going to be free. FICO score, some cards, they might provide that information for you for free. And there are some things that FICO will do for free, but if you want the whole shebang, you have to pay for FICO. So I kind of like to say FICO is kind of like the national. You're in the grocery store and you're buying macaroni and cheese. The The FICO score, that's going to be the national brand. That's going to be the one that's on billboards and commercials. You've heard of it. Everybody's heard of it. The Vantage score, it's going to be more of like that store brand, that private label mac and cheese. It tastes pretty good, pretty similar. It's not quite the same, but again, price is different. Credit Karma, it's going to have it's a soft inquiry. Again, so it doesn't count against your credit, doesn't hurt your score at all. On there, it is something that I've used personally as well. I will say about Credit Karma, though, just so you know, there are going to be, loan offers. There's going to be credit card offers and things like that. So they are trying to sell you some things. But if you're good about not clicking on some of those things, I think Credit Karma is definitely something that we could certainly use. I see another thing in the chat from Michelle asking about resource protecting your identity. A lot of different things. It's the big one. It's going to be passwords. Have everything protected with a password. Make sure your passwords are complex. They are long. They are something memorable. Something that you can consider is using a password manager as well. So that would be, it can create strong, complex passwords. And all you have to do is remember the one password for that password manager, and then it'll automatically fill in sites, things like that. So that is something that's could look at recommending, but protect everything with a password. And if you're able to, in many instances, turn on multi-factor authentication or two-factor authentication. So if you're logging into something, you're going to get an email verifying or possibly a text message as well. So and trust your gut when it comes to many things. So when it comes to protecting your identity, really, really important. You need to be vigilant, and because there's a lot of scam artists, there's a lot of fraud out there. But I can't recommend passwords enough, and making sure that they're strong and you have different passwords for everything. And that's where a password manager can help. There's a lot of different sites where I have no idea what my password is for it. It's in the password manager. It created a password for me, but I just have to remember that the password for the password manager. I see another question in here. How accurate? So like I mentioned, there's many different types of credit scores. It all depends on the information that they are pulling from. So all three of the different bureaus, they may have some different information. So that's why it's good to check, your credit report from all three of those, Equifax, Experian, TransUnion. So they might vary a little bit. And then depending on what type of score they're using, whether it's FICO, Vantage, or something else. So it's hard to say exactly how accurate. They all should mirror, or they should be around one another more than likely, but they may be pulling from different sources. So that's why it's a good idea to check multiple sources as well. So going back to some of the myths that we have on here, a common misconception I know that we get here in Wisconsin, because we are a community property state. Other states are as well. I believe 9 different states. Texas is another one where we have Altras. So those in a marriage, any debt that is incurred within that marriage, it is shared equally by both partners. So a credit card that's applied, or could be an auto loan or something like that, it's going to appear on both partners, both people's credit score or credit reports with that. So they don't have a single credit score, credit report. They each have their own, but they will appear on both as well. Paying off a credit card in full every month hurts your score. No, you don't have to pay interest. To show you're responsible with credit. It's important to have credit, but again, we don't have to carry balance, pay interest. Absolutely not. So it's going to save you money if we're paying our balances off in full every month as well. All three credit bureaus have the same information. Like I said, they may not. So that's why it's a good idea to check all three. There can be errors on a credit report. So you want to make sure that if there are, we want to take care of those, and we'll have that in the presentation as well. But they may not as well. So that's why it's important to check all of them. Debit and prepaid cards help your credit score. They do not. For the big reason is they're not credit. A debit card that is usually connected to a checking account, transaction account, that's your own money, so that's not credit. And prepaid cards, that's you loading your own money onto a card, which again is not credit. Both of them, they have a Visa logo, MasterCard, but they're not actual credit because it's your own money. With those prepaid cards, you're more than likely paying a fee or paying something, a loading fee or something to put that on there, but they don't help your credit score because they're not credit. Excuse me. Opening a new account will hurt your score. Like I mentioned, an inquiry, a hard inquiry, that can have a little bit of an effect. FICO said typically it's 5 points or less with that, but what a new credit account may do, it actually can increase your credit score. It can increase your capacity. So you have more credit available to you as well. So initially, your credit score may take a tiny ding, but it may get better with that new credit account as well. But I'm not saying go wild and open up a whole bunch of credit accounts to try to improve your score. It may have the opposite effect as well. So only open up a new credit account when we really need it.
Tony,
all debts are the same. As we saw before, 10% of our credit score is the mix of our credit. Again, credit card debt is looked upon less favorably than installment loans and things like that. So they are not created equal. They are not looked on there.
Hey, Tony, we do have a couple more questions in the chat. We have one that says, how about the Altra card that works as a debit or credit?
Okay, so assuming talking about an Altra debit card, and that would be I'm assuming at the point of sale. So you might get, let's say you go to the gas station or something, it's asking you, is this debit, is this credit? Both are being taken from your transaction account, from your checking account. It's just who pays for the fees, the transaction fees, those interchange fees. So if you choose debit, you're going to put in your 4-digit PIN, and that money's going to come out of your account like that, like right away, because it's not relying on a credit card network. It's actually, if you look on the back of your card, it's probably using the Pulse or Star or Plus system, and your financial institution is paying for the fees, the transaction fees for that. If you choose credit, you don't enter a PIN or anything like that, then that merchant, that business is going to be paying that transaction fee. And it might take it can't take more than 3 days to clear. That's why if you use your debit card and look at your account statement right away, or if you look online banking or something like that, it might say pending because it's doing a whole bunch of series of checks and balances, making sure that's an account. And also, I want to say, and that, like I said, that's merchant is the one paying for that transaction fee. It's typically going to go over the ACH, the automated clearinghouse. That's what I was looking for earlier in there. So either way, it's being taken from your checking account. But if we're using a debit card, it's not credit and doesn't help us at all. And common question too, I see from RLS, paid off mortgage and went from a perfect score to 810. 810 is amazing. By the way, really anything 715, 720 and up is considered excellent. And that is it's not a perfect system. I will say that when it comes to credit. And it's basically looking at there's not that asset, there's not that thing on there. The capacity more than likely changed with paying off that mortgage with that, but you're still sitting in an amazing spot right there. And your credit score can actually vary from day to day as well, depending on when that information is pulled and everything like that. And congratulations too, paying off your mortgage. So that is awesome, and that is absolutely amazing. as well. So that is a very, 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 very positive thing as well. And Sean asking, what is the max or least credit a person should have? Credit cards. It's a credit card. It's really all in when a person is ready. And, for some, I could, they'd say they can have multiple cards and manage those and pay those off in full. Great. There's some that, I know maybe they shouldn't have it because they're using it to live beyond their means. So I don't think there's a perfect number. There's a sweet spot. For that, it really depends on how we are with our own money. I will say with that. So I will leave. I know that does not answer question, Sean. I appreciate you asking how many they should have. I think it varies greatly from person to person with that. But if we're good with our own money, we're responsible with it, we've got a plan. We can consider a credit card or possibly multiple credit cards. But again, it varies from person to person. Going back to the myths, paying off a debt erases it forever. You think it would, but unfortunately it may not. Let's say something, went to collections and we pay off that collections, it may still appear on our credit report that collections, hopefully it's reporting a correct zero balance. But in instances like that, we can reach out to the credit bureau that's providing that report, and also reaching out to that collection agency to see if they can remove that as well. So if we pay it off, it should have a zero balance, but it may still appear on that score or on that credit report until it's taken off as well. You can fix your credit overnight. No, do not believe those commercials that you see at 2:30 in the morning saying you can fix your credit overnight, raise your score 100 points. No, what's gonna help improve your credit? It's going to be on-time payments, reducing balances, and the passage of time as well. Again, the older something is on a credit report, the less impact it has. Once a credit is bad, it always goes bad. No, not at all. I've seen and heard many instances where someone's been in a not so great place and they've gotten themselves up to a good place with on-time payments. I've also seen the opposite as well. So know that if credit's not good, there is hope it can get better. Ways to improve your score: pay down credit cards, decrease using those credit cards, rely more on cash. Studies have shown those that rely on cash typically pay more, or usually pay less than those who rely on a debit card, especially a credit card as well. So consider using cash instead of a credit card. Continue to make payments on time. If you're able to keep old accounts open, do that. An account may close without any usage over a period of time. So if we have something that we want to keep open, you can have something automatically charge that card, something small, a monthly subscription or something for a few dollars, and then automatic. You just set up automatic payments, and it pays off that card every month. So that could be a way to keep that card open, using it for something small and paying it off. Just to keep it open as well. But if having that old account, that old credit card without a balance on it, if it's going to tempt you to overspend, you may be better off just closing that card. We want to avoid all those excess credit applications. Again, only open up credit when we really need it. And this would be the very last step, the thing to consider, moving revolving debt into installment debt. So this would be consolidating credit card debt into, let's say if we're, could be a home equity line of credit or a consolidation loan or something, you're going to have to pay a closing fee, for that. There's going to be closing costs to that. So that's going to cost you some money, but more than likely your interest rate's going to be lower than what it would be with a credit card. But also I would look at how we got into that situation. Now, if it's something where there's a hardship, someone lost a job, there's a sickness, illness, injury, those are things you don't plan on. Car breaks, but if that credit card debt happened because of we're spending more, really look at those habits, those tendencies as well, and try to address that. Because if we're moving that credit card debt into a loan, and now our credit cards they're fresh, they're clean, they have no balance on them, and that's going to tempt you to spend, not a good idea. with that. And that's the very last thing on this list.
Hey,
We want
Tony,
to, oh,
we actually have someone that raised their hand, a vet.
hey,
I wanted to allow her to ask her question.
sure. So we talked about credit. So looking at college students are told they need a credit card for a good credit rating. It can help. Scott asking that. Like I said, there are other ways on there as well. They could be an authorized user on, let's say a parent's card or some adult that has a good credit worthiness. They have a good credit score. They're making payments on time. That's really going to help. So it doesn't necessarily have to be a credit card. One of the ways I got started with credit was actually I think I've got it somewhere in here. It was a free T-shirt. I like free stuff, and that was my first credit card. That's how I got started with that. It had an interest rate of, I want to say 24.99%, and I wasn't the smartest with it. That free T-shirt that cost me a lot of money and interest. I was a college student, so doesn't necessarily have to be a credit card. There are some other ways to get established, to get that started as well. But yeah, be responsible and make sure that we're able to make those payments, especially on time and especially in full if we're able to pay nothing in interest. And then I'm looking on here. Do balance transfers lower your credit score? So it more than likely, if we're opening up a new card, we have more credit available to us. So it really depends. If we're just shuffling money from one account to another, it's really not going to have that much effect because it's going to look at all of the credit available to you and how much are you using. So if we're just shifting it over, that really won't have much of an effect as well. But if we're opening up a new card and transferring that balance, that possibly that could help us as well. But don't open up to shuffle that debt into old ones. Don't do the credit card shuffle. And also know that with that balance transfer, do your homework on that. Some of them, they may have that low rate on what you bring over or 0% interest for 18 months. But then let's say we don't pay it all off in 18 months. They may charge us interest on that entire balance that we brought over, not just what's remaining. So, really do your homework and read some of the fine print with those balance transfers. And Stacy asking if you haven't used a credit card in months, does it show inactive on your credit report? It would, if it was closed by the issuer, it's going to say closed by issuers, or it's going to have language like that on there as well. But you should get notice before and saying, like, if you don't use it in the next 30 days, 60 days, like this account's going to be closed due to no activity. So you should get notice before a financial institution closes your card. Like I said before, beware of those companies making huge promises, to raise your score overnight or things like that. They usually charge a high fee. Be really wary of those. If they're asking for money before they do anything, get away for that. That's more than likely a scam. They may do nothing. They're more than likely doing things you could do yourself for free, like disputing everything negative on a credit report. They may engage in some, very dishonest, illegal tactics as well with this. They may, I've read about, online where a company may falsify a police report, basically saying you were a victim of identity theft, and then using that fake police report saying these charges don't belong to this person because their identity was stolen. Look at this police report. That's absolutely a crime. Do not do that. May try to issue you a different name, or open up an EIN or something, and they give you a number that belongs to somebody else. So really, if the negative information, if it's factual, if it is accurate, there's no legal way to remove it from your credit report. Like I said, the older something is, the less impact it has. If our credit's damaged, if it's taken some hits, how we can get it back. When it comes to a loan, credit card, we could get a cosigner, so somebody else to be on that account as well. We're more likely to be approved. Now, if that primary person cannot make payments, the cosigner is on the hook. So know that, but that can be a way to get, a loan could be a way to get a credit card and get back on track. Or that secured credit card, like I mentioned, as well. So we deposit that money that backs up that credit card. Good credit, it's needed for loan approval. You're also able to get lower loan rates on credit cards, cars, a mortgage, things like that. So we don't have to pay as much for those. Insurance also looks at credit as well. They find a correlation between credit scores, credit reports, credit worthiness, and insurance rates as well. Employment. So some industries, some businesses, they will check your credit. I started here at Altra almost 10 years ago. Absolutely, my credit was checked here at a financial institution. Renting an apartment as well. Landlords may request credit report. Establishing service. Maybe we're financing a cell phone. We're setting up, internet, cable, something like that. So all of that is going to be needed for to have a good credit score. How we're able to get our credit report, the FACT Act. That's how we can get it again once a week from Equifax, Experian, TransUnion. Annualcreditreport.com is the place to go. It is the only place that you can get it. It's government approved everything. I know it should end in .gov or something, but if you're at a site that's asking for payment information, it's asking for card information, card number, all that, get out of there. Don't do it. Annualcreditreport.com. You're going to enter your identifying information. It's going to ask you questions from your credit report and some of the answers for it. It's multiple choice. Some of the questions, it may be none of the above or it does not apply as well. So also know that. Reasons for obtaining a credit report, make sure there's no errors on there as well, especially if we're looking to, we're looking at, borrowing money. We're going to do a loan, a mortgage. We're looking at, a different insurance company or setting that up, or possibly employment as well. Making sure everything is on there. It's factual. It is correct. Making sure everything on there is yours. And believe it or not, accounts, you may have forgotten about some stuff, especially if you've had credit for quite some time. I opened up and I forgot about it until they sent me a letter in the mail saying they're going to close it to inactivity. But I had a store card that I opened up in 2002. I got it for a discount and paid it off right away. I don't know whatever happened to that card, but I got a letter in the mail about 13 years later saying that due to inactivity, they were going to close my card. They were like, please use your card, shop. So that can happen as well. It's a good idea, at least annually. But again, you could do it at least once a week. So certainly do that. We're getting here towards the end. Just a couple more minutes. I appreciate it. Inaccurate information. 3 things to do that you can do. The credit bureau. So whichever Equifax, Experian, TransUnion, all of them have an online form. They make it pretty easy to fill that out. They have 30 days to review it and get back to you. Also dispute it with the creditor, the store, the business, the merchant. And then the third thing, if let's say there's you have a hardship or something unexpected, you're able to tell your side of the story. Whether, someone extending credit looks at that or not, or how much they put into that, unclear, but it's a way to tell your side of the story, 100 words or less, that can appear on your credit report as well. These are all the different possible reasons. It was the same thing as good credit. The collection of debt is the only thing added to that slide we saw a couple ago. That's what annualcreditreport.com looks like. So you are on the correct spot. It's the only source for your free credit reports, annualcreditreport.com. Big takeaways, make credit card payments, credit payments in full and on time. You pay nothing in interest if you do that. Only open up new credit accounts if you really need it. Don't use credit to live beyond your means. That lifestyle float thing, those nice to haves, make sure it's a part of your spending plan if we are using it. Check your credit reports regularly. That's one thing that, really, if you get nothing else out of this, check your credit report. If you haven't done it in a while, I've never done it, certainly do that. If we're ever having troubles, reach out to your creditors. If they'd rather take some money than absolutely no money, they're more likely to work with you if you're the one reaching out to them than them having to call you, email you, bombard you with that communication. If you reach out to them, come to them with a plan, come to them with something, they're more likely to work with you and keep your accounts in good standing as well. And also, like I said, we have financial coaches at, I would say, most of our Altra offices as well. You can call our number and set something up. Head into one of the branches and consider meeting with them. But they can take a look at, your spending plan. They can take a look at your debts and kind of just look at your financial situation and help make some sense of it and see how we can make things work as well. Also, if we, bigger things, consider reaching out to a reputable, credit counseling agency as well. They're typically going to meet with you first and see what they could do. There may be, a fee or fees for those. But again, look for, something that's licensed, something that's approved as well. And not the commercials at 3 a.m. saying they could, reduce your credit overnight. No, stay away from that. I know that we're a couple minutes. I do apologize for that. If there are any more questions, we'll put that in the chat.
Tony, we actually have one individual that's been very, very patient. Thank you, Yvette. If you want to ask your question.
Yes, I was wondering if Care Credit was considered a revolving credit or an installment loan.
I'm not exactly familiar with Care Credit. So is that for?
It's medical.
Medical, okay.
It's like a line of credit for medical purposes, and I signed an agreement for to do so much per month for 18 months with no credit check. I mean, with no interest.
That sounds more like an installment. Typically, installment debt, it's going to have you borrowed X amount of dollars and you pay this back for Y amount of months, and your payments each month is Z amount of dollars. That's kind of typically, it's got a whole payment schedule with that. So that sounds a lot more like an installment loan than a credit card. But on your credit report, it'll actually tell you what loans are installment, what credit accounts are installment, what credit cards are revolving, what type of account is it, or what they classify it as. But based on your description, it sounds more like an installment to me as well. And then I see asking if they would pull a credit report for you. It's something we don't, just because it's better to pull your own report. That way it's a soft pull instead of us pulling it as well. So it's something that probably walk you through the steps in order to pull your own report. That's what we encourage to do. Or if you're able to do that and bring that with you to, say, a meeting, that's going to be something that we would encourage. So it's something we can do, but it's something that we encourage to, and that way you're able to do it for yourself in the future as well. But yeah, it doesn't count as a hard inquiry on your credit report as well. And we'll stick around here for a few more minutes. But again, the gift card that we talked about, and appreciate everybody. Thank you. Sorry, we are a couple minutes over. We had some few questions with this. I know. Okay, so we got another question here from Heather. Paying the full amount immediately, buying something hurt anything? It doesn't hurt anything, but it doesn't. It's basically like it really didn't hit your credit score, your utilization. And also, what I'd encourage you to do, Heather, is to wait until you get your statement, until that processes, until that goes through, and then pay that off, so that it looks like, okay, there was a charge, there was a payment. Whereas if we buy something and immediately pay it off, it doesn't really hit the, it's not really reported. It's almost like it didn't happen in the eyes of the credit bureau as well. So, but if you've got the money right now and that's something you want to do, I'm not going to stop you whatsoever. So certainly, yeah. But if you're able to wait until you get your statement and then pay that off in full, you won't pay anything in interest, and it's going to show as a full payment as well. All right, so we have looking at 4 different screens. I apologize for that, but let's drum roll here. All right, so Kanika is informing me that Nelson Redmond, hey, you have won our Amazon gift card, and Kanika is going to be emailing you with that information, but congratulations. But everybody, thank you so much. Again, this is being recorded, and we're going to be posting this. Look for it on our social media channels here as well. And again, everybody here from Altra is more than happy and willing to help each and every one of you. But thank you so much for taking the time to learn more about this very valuable and very important financial tool. All right. And I see Yvette. So I don't know if you're able to.
Yeah, you just answered my question a while ago. I'm sorry.
Oh, okay. Sounds good. I saw the hand up, and there we go. So excellent. Thank you all so very much. Appreciate it. Have a great evening.
Thank you.